Hi, this is Dan Reisinger. Thanks for checking out our Learn and Earn video. We are your risk-free retirement planning team, home of the IRA guys. The purpose of this program is to have some fun and educate our clients about the industry's #1 selling retirement planning annuity. Why has it become so popular? And also to provide you an opportunity to have us treat you to a $100 dinner at either Big Fish Grill or Firebirds, which is one of our 2 favorite places to relax and unwind. Attached to this video is a document in PDF form. Please pause this video now, print it out, and have it next to you as you continue to watch the video. If you don't have the ability to print, no big deal. Just pause the video and give Linda a call at 302 IRA Guys extension 4. That's 302 IRA Guys extension 4, and Linda will mail you one out right away, and then you can pick up the video where you left off. There are 5 questions that you'll need to answer which go along with this video. After answering those 5 questions, that will be your first $20 incentive. In addition, there are 3 spots on the form for you to provide us with referrals to your friends, your family, colleagues, or clients. Each of these will earn you an additional $20 incentive. And if you complete the quiz and all 3 referrals, that'll give you a bonus of $20 for the $100 gift card for us to treat you to dinner. So that you are comfortable with our process, here's how we'll handle those referrals. We'll send out a kit that includes information about our firm, our process, our mission, and how we handle our clients. It'll include an Ed Slot DVD, a CD with some of our past Safe Money radio shows, which are heard on WDEL each Sunday at noon, a recent newsletter, and our brochure. As always, we will handle these referrals with the utmost care and professionalism. Let's get started and look at some of the highlights of this retirement annuity and why it has become the #1 selling contract in the country. This contract is a fixed indexed annuity. We call it a FIA. The key word there is fixed. It means that the principal is insured and guaranteed. Index means that the growth of the cash value is determined by an underlying stock market index and the performance of that index, such as the S&P 500. Unlike a variable annuity, where your money is directly invested in the market in mutual funds, FIA contract owners have no direct exposure to the market and therefore suffer none of the volatility issues. Let's look at a traditional FIA indexed account. Over the brief 15-year history of FIAs, index accounts would have caps on them. As an example, if a cap contract had 5%, that would mean that a contract owner could earn between 0% and 5% in a given year, depending on how the index performed. This is where the old saying that we use for our clients out there, "Zero is your hero," comes from. That means your worst case scenario in a given year is 0%. If you think back to what happened in 2008 and the market decline, our clients would have received a 0% return when the market actually went down 40%, thereby protecting their principal in times of stock market volatility. Next, let's look at what makes this contract different than its predecessors. This FIA has introduced the first uncapped strategy in the market today. Now, it's still tied to the stock market performance, same as always, but it is a 5-year point-to-point. That means your holding period is 5 years, and that's how your return is going to be calculated. There is also a spread, which is really called a fee, in the contract. This is where the insurance company needs to charge a fee to be able to give you the guarantees of no loss. That fee is 75 basis points a year. So in an example, if you had $100,000 in one of these contracts, the fee would be 75 basis points or $750 in a given year. Let's look at an example of how performance would work. Let's say that over a 5-year performance, the stock market index returned 40%. So from year 1 to year 5, the index is up 40%. Your return would be 36.25%. How did I calculate that? Well, your annual fee of 75 basis points a year times 5 would mean the fee or spread is 3.75%, which is deducted from the 40% gain, thereby leaving you a return of 36.25. Now, the good news is that in this contract, regardless of stock market performance, 0 is still your hero. Even if the market performs 0, they're not going to deduct the fee from your cash value. Your worst case scenario in a poor market performance over that holding period would be 0, thereby protecting your principal. Let's look at an income rider and what an income rider is. An income rider is an optional add-on to a FIA contract which provides guaranteed growth regardless of market performance. This income value is the number by which an insurance company will calculate your income payment. Whether that income payment is over a single life or a joint life with spouses, this is the number that they use. So if the objective of this money is to provide future guaranteed lifetime income, adding this income rider would be essential to the planning process. For this contract, they have designed a stacking concept. What that means is that the insurance company is going to guarantee you a 4% return per year on your income value plus any index gains. So we describe this feature to our clients as a hedge against poor market performance. What that means is, let's say that the market just really performs poorly. With that rider, your income value is increasing by 4%, which means year by year, your lifetime income payment is going to grow. That's a real strong hedge against poor market performance. Let's look at surrender charges and penalties. Why are they in annuity contracts? Every annuity contract has a surrender charge. This prevents the consumer from being able to go and get their money real quick and damage the insurance company's portfolio. Let's remember, the insurance companies are taking this money, they're investing it for the long term to provide these guarantees for their clients. If everyone ran back to get their money real quickly, it would really damage the portfolio and the ability for the insurance company to give what they guarantee. Most contracts have a 5 to 10 year decreasing surrender charge. So over that 5 to 10 years, it goes down each year till it goes away between 5 and 10 years. Most contracts also waive surrender charges if the contract owner would die or if they needed to access the money for a nursing home or medical emergencies. Most contracts also provide a free withdrawal of approximately 10% per year after the first year. This provides some liquidity in those early years should the client need it. This FIA contract that we've been talking about provides all of those benefits. It has an 8-year decreasing surrender charge and all of the other benefits that we talked about. In addition, the contract offers a doubling feature of the income value should the client need home care or facility-based care, which is typically called long-term care needs. So that's another benefit to this contract. Let's wrap up. Our goal is always to provide our clients with access to the best products to meet their objectives. We utilize software to determine which is the best contract for you, which one is going to meet your needs, which is most suitable to you, our client. Thanks for taking the time and watching our video and learning more about the products that we offer here at the Risk-Free Retirement Planning Team. We always try to offer our clients the best solutions to protect and secure and grow their hard-earned assets. Once you've completed your form, the quiz and the referrals, get that back to Linda in any of the means that are shown on the form. You can email it, fax it, you can mail it, you can send it by carrier pigeon, whatever you want to do. And Linda will process the request and get your gift card to either Firebirds or Big Fish Grill out in the mail to you probably within about 2 weeks. As always, we are here to be a resource to you at any time, to you, to your clients, your colleagues, your friends, your family. We take pride in what we do, securing our clients' money from the volatility of the market. We thank you for being part of our growing family. Take care and have a most blessed day.
A little more spontaneous, unplanned fun.